I'm Stuart Yasgur, and welcome to Economic Architecture. I'm the founder here at Economic Architecture, which is a nonprofit organization that partners with others to address problems of historic proportions that are fundamentally the result of how we've all collectively designed and built our markets.
We can start doing things a certain way now and do that everywhere. We can really get ahead of the issue. Can't avoid it, but we can definitely be prepared for it.
This week, I really enjoyed having the opportunity to speak with Ashon Nesbitt. Ashon's the CEO of the Florida Housing Coalition. They work to expand and professionalize community land trusts throughout the state and create expertise in urban planning and real estate. Ashon's work is fascinating. He and his colleagues are working with community land trusts. We call them CLTs for short. CLTs are a structural innovation that's increasingly being used in communities across the country. And one of the things that's so interesting about CLTs is that they have the potential to offer permanently affordable housing. How do they do it? Well, they separate ownership of the home from ownership of the land underneath the home. And that helps because land is a scarce resource. And in the normal course of events, appreciation of the price of the land drives up the price of the home. But in a CLT, the land never gets sold. Ownership of the land stays with the community land trusts. So when a homeowner buys a home, they buy it without having to buy the land underneath it. So that makes purchasing the home much cheaper. In return, they agree on limits to how much the price of the home can appreciate. So homeowners have an opportunity to buy a home, own it, live in it, pass it on to their children, sell it when they decide to sell it. But there are limitations to the appreciation of the price of the home. And so the home remains permanently affordable in that community. One of the things to listen for in this conversation is when Ashon talks about the certification of community land trusts. Community land trusts, even though they've been around for a while, they're still relatively new. And that means that there's a learning curve for all the other types of organizations that are needed to create CLTs at scale. For example, as communities across the country are starting to adopt community land trusts, the banks and lenders are trying to figure out how they finance them. Right now, a lot of them are doing it in largely one-off transactions. So one of the things that Ashon and his colleagues have done is create standards and a certification for financing of community land trusts. And that essentially tells banks across the country that if these opportunities meet certain kinds of criteria, the mortgages that they offer those community land trusts can plug into the whole rest of the financial system.
It's a little bit about me. I'm from Florida, born and raised. And so just living in a state like this is very beautiful. But every place has its problems or its issues. And so, hurricanes and just kind of the extreme weather is just a part of life here in Florida. But of course, being here, always looking for, solutions or ways that we can deal with the things that, we take with the good with the bad sometimes. I grew up in a household that did housing, so I just kind of naturally got into it. And so how can we build, a strong housing stock here in Florida? It's just really important to ongoing affordability and continuing to, as we grow as a state, just have to address that issue. Exciting to be able to do something about it.
And you're actually so you're located right now in Tallahassee, right?
Yes, I'm in Tallahassee.
And so kind of what are some of the housing challenges that people are facing in Tallahassee?
Yeah, Tallahassee and just Florida overall, we're growing as a state still. The state, I think, has always been our history that our housing market is driven by other housing markets because we're a place where people migrate to mostly. And so once again, coming out of the pandemic, folks started to look up for other places to move because they could. Florida became one of those places, and we've always kind of had a relatively affordable housing market compared to other places. So if you're moving here with a high paying job and a lot of equity in your house from a higher price market, it's very easy to come to Florida and get something very nice in a nice location. At the same time, we've always had a pretty lower income workforce just by virtue of the types of jobs that are here. So most of the jobs that developed are, jobs that support the lifestyle that people want to live. So retail, medical, And of course, those folks have families, so you have teachers and, all of that. So, everything's kind of a support to this higher lifestyle. So we've got the pressure from the outside, and then you've got kind of a lower income workforce that's trying to afford. And so those two really don't mix very well. We've kind of been kind of going in a certain direction, and now we've kind of hit an inflection point here in our state.
Right. An inflection point because it's getting so unaffordable for people who have lived their whole lives in Florida and are earning their incomes solely in Florida.
Right. Like other places, it's hitting the higher incomes that it never hit before. And so now we got that going on.
Right. The income inequality is really exacerbating kind of affordability crisis. So then you start to move towards CLTs and kind of using CLTs, community land trusts as a model to make sure that there's permanent affordability.
That's right. And so, we're continuing to produce units, units that are affordable, but, those units typically have, if it's subsidized, there's a ending point to that. And so it's taking more and more subsidy to produce affordable units. And, that's a significant amount of public investment into that. And we don't want to lose that on the back end. And so permanent affordability, as a concept is definitely taking off here in our state, and I'm sure other places around the country. We want, when we produce something, to know that it is a permanent asset for our communities. And so the community land trust model involves, permanently removing, that land from the speculative market through legal aspects of a ground lease and a nonprofit entity, or sometimes a governmental entity that owns that property or that land beneath those structures. So those structures themselves, and when they eventually become obsolete, you still have that land as an asset that will always be used for housing that's affordable, particularly for our lower income workforce and other vulnerable populations.
Right. And so by kind of moving towards the CLT, whereas before the public investment in affordable housing, the public is investing a lot to provide affordable housing. But then when that subsidy kind of it ages out, that the public is not left with anything, that housing starts to go back to the kind of market rates. There's no longer affordable housing being provided. But by moving to a CLT, community land trust, you're able to make sure that the land, by removing it from the speculative market, is always dedicated to the purpose of providing people with affordable housing kind of going forward.
Absolutely.
Yeah, that's fantastic. I think it takes a little while for people to get their heads around CLTs, community land trusts, because they look different, but they make a tremendous amount of sense.
Yeah, it's still, even though it's growing in popularity, there are definitely still, some barriers in addition to the usual things, the ability to acquire land, which we are tackling. A lot of community land trusts have good relationships with local governments, or they themselves were started by local governments. So that kind of disposing of the land for housing through the CLT is definitely something that we're working on big time in Florida. The financing, this has been kind of a long time to getting more, particularly on the homeownership side. In the past, there was quite a bit of a variety of programs that were out there. There wasn't kind of a mandatory standard in terms of legal documents. Now, there were definitely standards that have been promoted with now Grounded Solutions Network. That's kind of where all of this started. And then kind of getting to a point where, in order for this to really scale, or in order for it to be replicable in a way that will make a difference across, many different geographies, there's got to be certain things that are standard. Everyone kind of has to use the same ground lease, basically. Everybody, should have certain things in their operating procedures that they all do similar. And the reason for that is because when lenders are loaning, the CLT itself becomes a counterparty to that transaction, because the CLT is the landowner and there's a 99-year lease. So that CLT is kind of coming alongside the borrower in that transaction with the lender. So the lender has to be comfortable with the CLT, that, they have to review their documents, their operating procedures, be comfortable that the CLT is going to be around, that the CLT can do what it's supposed to do. kind of be that fail safe for the borrower. And, that takes a lot, if you're doing that a lot of time for a lot of different groups
Right.
to make sure that, you're meeting your requirements as a lender. And so that's really been a big part of what we've been doing as an organization is how can we work with the industry to establish those standards and promote those across the CLTs in our geography.
Yeah, that's great. I mean, can I play it back to you, see if I'm tracking with you?
Yes.
So community land trusts secures land. Either they purchase it or they get it from partnership with local governments, local communities. There's a home on that land. A homeowner sets out to purchase the home. There's an agreed price. They're going to own the home, but the land is actually controlled by the ground lease that's controlled by the nonprofit or community land trust. In order to purchase that home, most homeowners are obviously going to need a mortgage. And in order to get that mortgage from a lender, the lender is providing a mortgage on the home, but because the ground lease is critical to be able for the homeowner to stay there, the CLT itself becomes a third party, essentially, to the mortgage.
That's right.
And because originally it was such early days, some of these CLTs look really different. Like some of them might have very elaborate operating agreements or very simple ones, or all kinds of things. And so for the lender, when the lender looked at it, these became kind of bespoke kind of loan products that they were making for each individual CLT. But now when we're doubling the number of CLTs and maybe even growing from there and getting more housing units per CLT, it becomes really inefficient and it becomes a barrier for lenders to actually put money out the door. And so by kind of standardizing, what do those loans look like? What are the CLTs? How do they work in a standardized way? And what are the operating agreements, all that kind of stuff? You really kind of create the possibility for efficiency for lenders to be able to do multiple of those kind of loans as opposed to doing this kind of in a one-off kind of way.
That's exactly right. So we've got 40 CLTs now. Eventually, those will all be producing, a number of units a year. This is a significant amount of business potentially for lenders. And to have to, do it kind of on an individual basis is quite a bit. And so to produce those standards across the board, Fannie and Freddie worked on this, and that's been really, I think, transformational for CLTs and has really opened the doors for just better lending options for buyers that are looking to assets as a way to get into homeownership.
That's fantastic. And so Fannie and Freddie are actually kind of looking at these standards and saying, these are the ones we'd recognize. These are the ones we'd kind of accept.
Yes.
And that really then opens the door for the secondary market for these loans. Because if Fannie and Freddie would accept it, then lenders can feel more secure that, even if they make these loans, if they originate the loans, they'd be able to sell it into the secondary market, either to Fannie or Freddie or to somebody else who's participating there.
Yes, absolutely. And we have to applaud both Freddie Mac and Fannie Mae for really pushing through this as part of duty to serve. A big part of that is, creating liquidity for shared equity products, particularly for community land trusts. And we've been a big part of that, working with them to simplify that process so that it can work both for the lender and for the borrower. Ultimately, that's who benefits from this. Now that opens up, Fannie and Freddie products to them and opens up, many, many more options. So we're really excited about the future of this.
Fannie and Freddie are so, people are so familiar with the names, but they're also big and complicated. I don't think people recognize just how much innovation has also been coming out in the last few years to really kind of move forward in interesting, kind of smart and sophisticated ways to address different dimensions of the housing crisis.
Yeah, you're right. Most people, they hear about Fannie Mae or Freddie Mac, but who exactly, are they? They really create this platform for, lenders to offer affordable financing for homeownership. And it's important that this segment of it is not, left out of that.
Right. Absolutely. And then I think this is huge structural change, right? Like going from bespoke product to creating something that could be standardized and start to kind of go through all the kind of apparatus that we need for mortgage products and the possibility of enabling many different lenders to come to it. Already that's a huge innovation and change to help usher in. But then you're also seeing the effect of climate and weather and extreme weather and disasters in Florida, right? We all know about the hurricanes and the impact that hurricanes have on Florida and Florida residents. Can you tell us a little bit about kind of how you're thinking about that with CLTs and all the affordable housing that's being created?
Yeah, this is something I consider a leading edge issue when it comes to homeownership and mortgage finance, just generally the threat of hurricane. And it's interesting living in Florida is we just kind of live. And I know for folks outside of Florida, it's terrifying, but it's a part of life here. But we do know that just because of the increased frequency of these weather events, but it really is becoming a part of the choice, part of the calculus, if you will, of choosing where one lives. Is part of that thought process. Am I living in a high risk area or not, or choosing to? So much so that it's now on Zillow. You start to see those risk factors, and so we know that at some point it's really going to become a factor in mortgage finance. So we're trying to get out ahead of that to make sure, that the mortgage is going to follow insurance. And if people can't get financing to purchase in certain areas, that's definitely going to depress property values in those areas. We know that across certain communities, that additional issue, could really further depress property values that have already been devalued in some ways just because of who lives there. And so we want to address that. We know that if we can build in a resilient way, that will help those communities to hold value in a number of ways. It becomes a much more attractive product. And also that's on the front end. Behind a disaster, they're able to withstand or much more quickly recover because of the way things were built in the first place. We can start doing things a certain way now and do that everywhere. We can really get out ahead of an issue. We can't avoid it, but we can definitely be prepared for it.
Right. Given that these extreme weather events are kind of increasing in frequency and magnitude, if we're thinking about smart approaches to providing permanently affordable housing, can we also make that housing resilient in the face of these weather events?
Right. I mean, if you're thinking about a CLT property, that's 99 years perpetuity, thinking about that structure being a permanent asset for the community, and then, bringing it down to particular homeowner, this behooves us to build it to the highest standard possible at the front end so that it really does stand there as that asset.
And is that possible economically? Because of course, like on one hand, like, creating affordable housing, we need it to be, we're very cost conscious. Right? And I guess there might be a difference between, how cost conscious are people on day one versus kind of total life of the structure, kind of how do we get the most value in cost saving it. But can you talk about a little bit about how feasible it is from a cost perspective?
Yeah, so that, gets to one other thing that can become a challenge is the cost of building, to a higher standard. We know insurance, and I'm getting technical, sometimes it's based off of replacement costs that can, raise the cost, the operating cost for the homeowner because the structure just costs more. And so, hey, even though it costs more, there's less risk, how can we get credit for that balance?
Right.
Out?
Right.
So, there's the actual cost and the kind of the downstream other things that happen because of the higher cost. And then, how to mitigate that, whether it's, lower cost of capital, is it savings on insurance? And those things might not exist now, but hopefully we can justify those things.
Yeah, absolutely. Because as you describe it, people may not realize there's actually a bit of a perverse incentive right now built into it, because if the cost of your monthly insurance is sometimes based on the replacement cost of your building, that means that if you spend more money to make your home more resilient, your monthly payments on insurance may actually go up, because if they have to replace that building, it would cost more. But of course, because it's a more resilient building, in theory, the replacements would come less frequently. And so there's a lower risk for each of those events to occur. And, maybe this is part of the frontier of where we need this conversation to go is, can we see enough savings from the risk reduction to help actually pay for kind of part of the resilience, increase in resilience as well?
Yeah, I think there's some places where that is starting to happen. The insurance industry, and we need to bring it to Florida, but in other states have been able to justify, lower insurance costs by building to certain standard. We have a very strong building code here in Florida, which, already exceeds that of many other states. And so, through this, we're encouraging folks to go above the code. The code is really supposed to just be the minimum, right?
Right. Yeah,
And
of
so
course.
going up, above the code to meet standards that the insurance industry has put out in other places. And hopefully in certain markets, we can definitely start to see a insurance saving for me.
Where do you think the biggest areas of opportunity are, kind of looking ahead?
Looking at what we're trying to accomplish here, I think it hits on a lot of different areas, I think, of opportunity. The growth in the permanent affordability movement, and this adds to it and has potential to make it, that much more attractive. The fact that we're building to a high standard, we really want community land trusts as nonprofits to be, premier developers and their community. I think that's just important to the image of the movement. It's this issue of risk. That's really part of the CLT is reducing, reducing risk to the homeowner, giving them stability for their life, but also to those that are providing financing. It provides a low risk product, a low risk bar, a low risk situation, but definitely benefits communities by creating stability. And so kind of looking at all of the ways through this model that we can create a much more lower risk of profile, both of a borrower and of a community. And if this can be done on a larger scale, it could be revolutionary. There's a lots of pieces to this. It touches design, it touches risk management, touches, land use and zoning, finance. And it's something that, I just think about generally when it comes to housing, we tend to just focus on the policy or just on the financing piece. But if you think about it, I mean, all of these folks or all of these, disciplines and industries, touch any one house that exists. And I think, being able to bring all of that to the table and all of those people to the table at one time, kind of answers your earlier question, is also an opportunity, for collaboration and just listening to what we're trying to accomplish here and all the things that need to happen for this to really have the impact that we hope that it has. What we would just really love to have and just to hear folks from different perspectives, weigh in on what this is from wherever you sit.
That's great. That's great. Well, Ashon, thank you so much for joining today and kind of sharing a little bit about the work that you're doing. So thanks so much for taking the time. Really appreciate it.
Thank you, Stuart.
Take care. In working with community land trusts, one of the things that Ashon recognized is that permanently affordable housing also needs to be resilient in the face of increased extreme weather events. And there's a real moment of opportunity as we're building these community land trusts to build in that kind of resiliency from the outset. I think it's really important to talk about CLTs now because nationally, we're experiencing a crisis when it comes to the affordability of homeownership. And CLTs, because of their model, they actually change the structure of ownership itself. And because of that, wherever a CLT is kind of put into place, you have access to potentially permanently affordable home ownership. It doesn't require constant expenditure, constant subsidy. This model perpetuates itself through the marketplace. The issue is, instead is that we really have to focus on helping the market recognize the promise of CLTs and the potential they can create for new kind of revenue streams for complementary businesses. Community land trusts are particularly important for a few reasons. One is people who are entering the housing market. Prices are so exorbitant. It's hard for people, even if you can make your monthly payments, it's hard for people to save up for a down payment. It's very hard for people to get on this kind of home ownership ladder. Second, there are a lot of communities that have long history and really important aspects of those communities that are under threat from rising home prices, have been increasingly getting displaced. So we see that in cities like Washington, D.C., we see it in L.A., we see it in Houston, Texas, we see it in Florida, we see it in Massachusetts. A lot of these communities that have done everything right, have worked hard to create a place that is really valuable to live, are unfortunately coming under pressure. One of the things that community land trusts do by capping the appreciation of those homes is help make communities resilient in the face of pressures for displacement and gentrification. There are people who have pointed out reservations about community land trusts, and they say, well, like that price appreciation is important for people, for families to be able to build wealth. And they do have a point there, but I think the point is often overemphasized. And this is why. There are two reasons, I think. First of all, when homes are more affordable, a smaller portion of your monthly cash flow goes to paying for your housing. So think about it. If you're a homeowner and instead of paying 40% of your kind of income for housing, you pay 20% of your income for housing, well, you have another 20% of your income to put into other wealth building assets. The other thing that I think people don't really appreciate about how community land trusts or CLTs can help people build wealth through home ownership is that owning a CLT home is often that homeowner's first home. Because the housing costs associated with buying a CLT home are less, it provides an opportunity for people to save more of their income and build their wealth. Then they can use the wealth that they've saved to purchase a home that may not be in a CLT. It might be a traditional home where you own the home and the land underneath it in what we kind of technically call fee simple ownership. So CLTs can really be a step in the home ownership journey. I'm Stuart Yasgur. This is Economic Architecture, the podcast. Stay tuned for future episodes of the Economic Architecture podcast.